Anthony, of course, I mentioned the Nvidia deal, but we also have Intel's first public share offering since their public listing, in the 1970s or so. How does this really come through into the Asia session?
Yeah, let's go through the numbers on Intel really quickly. So it can be upsized to around $20 billion. That's about 2 times the normal ADV of the stock, which has been much higher in recent days. The pricing is around 6.5% discount, which compares kind of favorably with a 4% 1 sigma move in the stock. So the deal is tight and it is very well oversubscribed, but it is a big deal. $20 billion to absorb at this stage in the AI cycle is a lot of money. And it'll be interesting to see how this stock trades after market. It was weaker into the announcement of the deal. Now, going back to Nvidia, what is interesting here, and that ties in all the concerns that you mentioned, is concerns about capital discipline. Nvidia becoming the banker of choice to the AI ecosystem is not what shareholders signed up for with that stock. And it's very similar to the Korean situation, where shareholder return is becoming a much bigger facet of go-forward expectations from retail. And as a result, you're seeing this weakness early in next trade, in Samsung and Hynix, as it appears that the AI ecosystem remains extremely committed to high levels of capex versus shareholder return. So that debate is really strong on the hardware side, and it's coming at a time where the software side of the AI trade is doing really well. So, for example, again, last night, you saw the software space in the US trade really well. You're seeing HS Tech in China trade really well, Tencent, Alibaba, and other kind of China hyperscalers. So the focus has moved from hardware to software because of the capex concerns and the spending concerns around the hardware side. And that concern will not be alleviated by the capital raising you're seeing today.
At a time when broader investors are questioning just a sheer amount of spending that's gone into AI, we really see these big players doubling down.
We really do. And, honestly, I was hoping for a little more detail than we got after the initial report on this $500 billion investment plan. Even after the Nvidia announcement this afternoon, we still don't know what the timing of these investments might be, what the structure will be for the financings, and how much of the plan goes beyond the string of AI deals that Nvidia and the Wall Street firms have already made. I think that, as you hinted at, this is going to continue to drive concerns about the so-called circular AI deals that Nvidia has been linked to over the past several months.
You got to wonder, Avril, is compute the new asset class?
Yeah, making it an investable product, right? And worth noting as well that this is going to be third party. So it's not going to be sitting on Nvidia's balance sheet. Aside from that, just look at the names that are in the mix, right? All the big private market firms, BlackRock, Blackstone, KKR, Polo, even Goldman Sachs in the mix. And as we've heard from Jensen Huang, he pretty much went to them with the idea and nobody said no. So very interesting in terms of what this means for the AI infrastructure build out. Of course, as we highlighted earlier, this is coming as Intel is looking at a share sale as well, could be to the tune of $15 billion, but it's also looking at something towards $20 billion, sources say. And this would be the first time, this first share sale since the early 1970s. So quite something as well. And of course, it's not just Nvidia, not just Intel. We're also watching the likes of Anthropic, a $9 billion deal with the likes of Macquarie as well as GIC. So just this idea of how much financing is required for the AI infrastructure build out, Yvonne.
Yeah, and it continues to really add on, right? When you take a look at what TSMC numbers suggest as well, they're talking about 45% a rise in terms of monthly sales. Does some way signal this AI demand is sustainable in some ways. You square that with, of course, this financing on all the headlines we've been seeing across some of these deals. It certainly leads to a lot more focus back on the attention of where to next in this whole AI trade. Let's bring in Felix Wang now, Managing Director of Global Technology at Hedgeye Risk Management. Felix, it's great to have you back on the program. Let's start with the Nvidia news here. I mean, $500 billion certainly is eye-popping. I'm just wondering what went through your mind when you saw that headline.
Yeah, it is a huge number. Thanks for having me back. There's a reason why Jensen wears a shiny, expensive leather jacket. He's able to see far ahead and exert control over the AI game and competition. And right now, a new part of the game is about financing, lowering the cost of capital, lowering the financing constraints for their customers. That could be another structural advantage for Nvidia. So the way I'm thinking about it is this: if Nvidia and AMD both have similar compute and TCO economics, but Nvidia's customer wants, say, for example, 10 billion of compute, and they only have 1 billion of EBITDA, so that means they have to borrow. They have to borrow billions of dollars of financing at an attractive rate, and Nvidia can facilitate that lending. So to me, that's an advantage. In effect, they made Nvidia's product cheaper without really cutting GPU prices. Again, it's about controlling of the game, extending their moat. But I also see this financing layer, if you will, as a double-edged sword for Nvidia, because yes, it can absolutely extend the hyperscaler investment runway by allowing them to borrow at attractive rates. But it also makes future demand kind of more sensitive to credit conditions, credit volatility, and raises a lot of questions on what we consider to be real demand. So this is why, Nvidia, if you look at their 5-year CDS, they jumped today the most in 2 weeks. Financing can pull forward demand and raise the risk of overbuilding. So it is a double-edged sword here.
I just want to pick up on some of those AI themes and that story we mentioned a moment ago about Nvidia tapping US investment giants. I mean, Jensen Huang said he approached 6 of the investment giants. They all said yes, $500 billion in financing for AI infrastructure with compute power acting as the collateral. Now, I know you say AI is not necessarily a bubble, but sounds like you've got a few caveats.
Well, yeah, I mean, AI isn't necessarily a bubble, but the market needs an earnings reality check. And I won't, so I won't say that we're in a bubble for that, but because AI investment is just enormous. I mean, we can all agree on that. The economic benefits are beginning to show up. Productivity gains could be substantial. We expect that they will be, but investors have already priced in a lot of that future success. So if the market continues higher from here, which we do expect it to, I will say, it would be because of an earnings-led melt-up versus a valuation-led melt-up. So if earnings deliver, we're very positive on technology. In fact, we're not bearish on technology at all. We're very bullish on the earnings power of AI. Where we exercise some caution is the price that investors pay for that growth. So the technology may be right, but the stock can still be wrong. So with valuations and expectations really high, companies need to continue to deliver really strong earnings growth to justify those valuations. So you need to look at technology and all the different ways that you can play AI in order to make sure that you're not overpaying and you don't get hit, but you also can be productive with your investments.